The purpose of buying an LIC is an insurance policy, right? You are looking for an insurance, you're not looking for an investment.
That for the huge lock-in period plus the huge premiums that you're paying, you're not satisfied with the returns.
But when I changed my lens to it being like a long-term investment, I'm okay with it given the fact it is giving me equivalent returns to that of a PPF, little bit more than that PPF, right?
And why do people even buy LICs?
And then I went to the same family uncle,
Yeah.
uncle, what will happen if I surrender? I got a very weird answer that, okay, why do you want to surrender? It's a good thing and all those things. But then I went through the fine print and it said that.
Hey folks, welcome to Ditto Insurance. I'm Akanksha and today we're going to do something different. We thought of making a video on LIC, but instead of one of us coming here and talking about LIC, we thought to do something different. We thought to bring one of you here and talk to you personally about your experience with LIC. So stick around and let us know how you feel about this video. We'll be talking to Tushar. He's a product manager at Microsoft and an avid reader of FinShots. So thank you for joining us today, Tushar.
Thank you, Akansha. Thank you for having me.
All right, Tushar. So let's just dive into the questions. So I would first want to begin by asking you what has been your relationship with money so far? So when was your first job? How much were you earning? Maybe you can give us a benchmark out of which how much were you saving? Where were you saving it? So yeah.
Sure. So I passed out of BTech in 2016 and started working around that time only, right? Initially, I wasn't earning much. I was earning around 25 to 30,000. So at that time, I've always been someone who wants to save money, at least some amount. So I was trying to save 20% to 25% of my monthly income. Then I gradually moved to little bit higher income slab, and then I started saving a little bit more, somewhere around 30 to 40%. In 2019, I went for my MBA. I graduated in 2021 from FMS Delhi, and since then I've been working in Microsoft. And now, given that I have a higher buffer to save, I try to save around 40% to 45% of my money through various financial instruments.
Okay. So we'll talk about one particular instrument today, and it's your LIC policies.
Sure.
Right? So how many LIC policies in your family? You just told us some time ago.
Yeah, so there are 16 LIC policies approximately in my
Amazing.
family.
Amazing, 16 policies. That's actually a lot, right? Like 16 LIC policies. Amazing. So, and how many are there in your name?
4.
Okay. So, yeah, 4 LIC policies. So, is this an investment that you made yourself or is it like passed down from your parents?
Essentially, yes, passed down from my parents. So, if you have been in any tier 2, tier 3 city, right? Each family has that one LIC agent uncle or auntie who's going to sell you those LIC or to your family. So same case, right? Where we had a family friend who was an LIC agent, and I think he was waiting for me to turn 18 so that he can start selling LICs in my name.
Yeah.
Right? So as soon as I turned 18 in 2012, I got my first policy.
Amazing.
I got the first policy in my name,
Yeah.
and then followed by 3 more policies in subsequent years.
So we'll just try to talk about your plans in particular. So can you tell us which all policies are there in your name?
Right. So I think there are 4 policies.
Okay.
There are a couple of Jeevan Anand,
Okay.
one Jeevan Lakshya, and one Jeevan Labh. Now,
Okay.
all of them are endowment policies. Essentially, you get some maturity
Yeah.
amount on the maturity of these amounts, but there's a little bit difference in each of the policies.
Okay. So can you tell us in which years? I mean, you're saying that the first policy was bought in 2012 when you turned 18. Can you tell us the subsequent dates when you got the other policies?
Right. So the first one was 2012. Then
This
the
was Jeevan Anand.
Jeevan Anand.
Okay.
Then 2013 again another Jeevan Anand.
Yeah.
Then 2016 Jeevan Lakshya.
Okay.
And 2019 Jeevan Labh.
Now let's go through each policy one by one. So like we said, Jeevan Anand, it's like an endowment plan. You get a one-time lump sum after a particular time period, right? So what are the terms, like what are the terms of this policy? How much premium are you paying? If you could give us like a benchmark.
Right. So typically so in Jeevan Anand, right, when it started in 2012, I was paying around 30,000 per year.
Okay. Okay.
And the maturity or the sum assured value is 10 lakhs. So during the policy holding time, if something happens to me, I'll get, or my family will get 10 lakhs rupees
Okay.
any point from the point the policy started.
Okay.
Right. The policy in Jeevan Anand, it works little bit differently. So it's an endowment plan for the whatever time you choose. So in my case, 30 years. So my policy in 2041 will have the maturity amount given to me, but the policy will be valid for 100 years from up to the age I am 100.
Okay.
So the policy will be valid till 2094.
Okay, so this basically means that, so although it started on 2012, the payment will end in 2041. That's when you will get your lump sum, which is the X lump sum amount plus your bonus amount. What you're saying is for the next 100 years.
Up till I get 100.
Yeah, so what you're trying to say basically is that the policy ends in 2041. This is when you will get your bonus amount plus your lump sum amount. Plus, and now, apart from this, until you turn 100, that's 2094. If you pass away due to some reason, you get a 10 lakh rupees.
Yes.
Right. So, Tushar, you actually have 4 policies, 2 Jeevan Anands, 1 Jeevan Labh and 1 Jeevan Lakshya. So, the Jeevan Anand and the Jeevan Labh is like a one-time lump sum payment amount at the end of the maturity. And the Jeevan Lakshya is sort of like a recurring income plan at the end of in case of the demise of the policyholder. All right. Okay. So, now that we are actually talking about returns, you say 7 to 8% returns. Let's actually try to break down the return of each policy. So, folks who are watching us, you can actually see a table pulled up on your screen. So, we'll first talk about the Jeevan Anand plan. Tushar's Jeevan Anand started in 2012 and it will mature in 2041. And there are 3 components of his maturity amount, and they are the sum assured, which is 10 lakh, plus there is a bonus which is calculated as per 48 rupees per 1000 into sum assured. And then there is another full bonus rate which is calculated as 1100 rupees divided by 1000 into sum assured. And basis this, since this policy started in 2012, his XIRR is around 8.22%. So, Tushar, this is 8.22% tax-free return.
Yes.
So, what's your take on this? The fact that it's tax-free 8.22% return. Do you think it's enough? Do you think it's more basis on the premiums that you're paying, which are, like you said, in the tune of almost 30,000 rupees per year? So, what's your take?
Right. So, so when you look at, in general, any return, you expect 7 to 8% return at the minimum, right? So there are instruments like PPF and stuff which gives you around 7 to 8% tax-free returns, and you can compare it to them, right? Low risk, long-term tax-free returns. There's still some cons, right? First, right, when you look at LIC, right, the purpose of buying an LIC is an insurance policy, right? You are looking for an insurance, you're not looking for an investment. And if you compare it, if it's nearest parallel, which is a term insurance, right? So you can get 1 crore amount of term insurance in, like, say 10,000 rupees at my age, right?
Yeah.
So I am paying 3 times the premium for 1/10 of the sum assured, right?
Yeah.
Now, when you look at from that lens, it's not a very good deal.
So, one of the biggest con is the fact that the lock-in period is very strict, right? So, you can't stop paying your premiums until 2041. So, would you want to tell our viewers what would happen, say, for example, if you stop paying your premiums or if you surrender your policy?
Right. Again, a great question, right? So, when I was analyzing all these policies in detail, the first thought that came, okay, why am I paying this much? Let's go to a term plan. I'll get 1 crore very easily in 1/10 of the amount. So, why I'm paying all this? But then I decided, okay, let's see how can I surrender them. And then I went to the same family uncle, what will happen if I surrender? And then I got a very weird answer that, okay, why do you want to surrender? It's a good thing and all those things. But then I went through the fine print and it said that you will get 30% of your premium back.
Okay.
Excluding that, you can only surrender after 3 years and then you can get only 30% of your premium back. So that's a huge haircut on the premiums and the amount that you have invested. So if I have already invested for 10 years, 30 years, so I have already invested 3 lakhs and I probably get 90,000 to 1 lakh back only.
Okay, but what if you stop paying the premiums? Is that not an option?
No, in that case, the policy lapses. So even the sum assured anything, even if it's up to the year 2040 or something, I believe that will also be not applicable because that's a default.
Yeah, so which means basically the premiums that you've paid so far will also be, you'll have to forfeit them. You won't be able to take them back from the LIC. So it's very sneakily worded. Yeah, so we'll actually go through the returns of your second policy also. So you have another Jeevan Anand, which was bought in 2013. And here the XIRR is around 8.29%. Same calculations, the 48 by 1000 into sum assured and 1100 into 1000. So the difference is probably because of the repo rate, the year is different. So the bonus rate that they announce is different every year. And for different policies also it's different. So it's 48 rupees per 1000 for the Jeevan Anand plan. But for Jeevan Lakshya, if you see, it's around 49. And for Jeevan Labh, it's around 50. Right? And so this is also the case for the full bonus rate. For Jeevan Lakshya, it's around 450 by 1000. And that's how you'll calculate the full amount. And for the Jeevan Labh also, it's around 450 by 1000. So basis this, your XIRR for the Jeevan Lakshya is around 6.73%. And for your Jeevan Labh, it's around 7.36%. Right? So basically what you're trying to say is that for the huge lock-in period, plus the huge premiums that you're paying, you're not satisfied with the returns.
Right. So I am here because as we mentioned, right, surrendering is not an option anymore because I'll have to take a huge haircut. And in the end, I'm at least expecting 7 to 8% return, so that's okay for me. So that's why I'm still investing and I'll keep on investing. But if you ask me that today if I'm going to buy a new one, probably not.
Okay. So so that's actually my question, that you realize that the returns are not good enough. But then why did you buy another policy? So like your first policy was in 2012, the second one was in 2013, then 2016, then 2019. Like why did you buy multiple policies after you realized that maybe the returns are not good?
So 2019 was my last policy, but all this realization and everything happened in 21-22 period. So I was my family was keeping on investing based on whatever financial knowledge they had, right?
Okay, so do you know anyone else who actually had an LIC policy, they bought it, they realized the returns are not good enough and they just surrendered it?
Yes, coincidentally my wife, right? So my wife also started an LIC based on her family's decision that, okay, let's start investing in an LIC. I think she started in 2016, but soon they were quick to realize that this as a financial instrument does not make sense as an insurance policy, right? So they started or they discontinued the policy within 2 years by forfeiting all the amounts. But essentially they had to forfeit the policy.
Okay, and did they get an alternative to that?
No, but they just forfeit, just essentially.
No, as in did they get an alternative to the policy? So because they wanted insurance, so did they go and buy a term insurance?
Right, so they went for a normal term insurance.
Okay. So Tushar, when we realize that it's probably not a good investment option, it's not even a good insurance option, then why do people even buy LICs?
Again, a great question. So first thing is, family, friends and people in your family,
relatives
right?
come in.
Relatives come in with good proposals on, Second is the trust factor on LIC as a brand, right? Because it has been there since 1935, I think, right? Or 1955, something. And people people in my father's generation, in my parents' generation, has seen only that as an insurance product. People are very protective of their financials, and then they tend to trust very strong government brands like SBI or LIC, where they are ensured that their money will be safe, right? And I think a lot of people do not understand how these instruments work.
So what you say actually makes a lot of sense, because people don't think of things like inflation, time value of money, how they should probably put their money in better uses, with the opportunity cost of putting your money in an LIC. You'll probably think, okay, I'm getting 8% returns, but you could get more returns in a mutual fund. You could get more returns in equity, right? So so that's a very interesting point. Okay, so let's get to the final part of our video of what can we do to fix this situation. So can we cancel the policy, or can we submit or surrender the policy? I don't think that's an option, because the policy is worded in such a way that if you do, you might have to forego all the payments you've done so far, and you'll just get like around one third or 30% of whatever payments you've made. So the next option is to stop paying the premiums, but that's also not an option, right?
Agreed. I mean, that is worse than forfeiting.
Yeah, because at least there you get 30% of the returns.
Right. So in that case, when I surrender, I still get 30% of the returns plus some bonus amount, I think. But in this case, your policy you are a defaulter. So you're not eligible for any of the benefits if something happens to you, even during the period, and it's essentially you discontinued the payment, you are not going to get anything.
So in the policies that you hold, I think the terms are like, if you don't pay the premium for 1 year, they'll probably give you some time to pay the premium and pay the backlogs up. And if you don't do that, then your policy is gone. All the money that you've paid is gone. They're not going to give it to you.
So there's some term that says that, okay, if you miss a payment, they'll still allow you to repay it, but there's a time limit to it.
Yeah.
And then
after that duration,
right, and then you have to pay all the backlog and stuff. So that's how they have worded it. First of all these policies are very complexly worded, but yeah, so that's how they have worded it in terms of that. Yes, you can stop maybe a couple of payments, but you have to restart them if you want to be eligible for any kind of benefit, and then you have to do all the back payments.
So yeah, I guess you don't have any option. You'll have to keep paying them.
Yeah.
The one answer, like, because of course it's like a 7 to 8% return, so it's a decent investment. Like you said, it's probably in the below average rate of return that you get. But for an insurance perspective, it's not sufficient, right? So another option could be for you to buy a term plan. So do you already have a term plan?
Yes. So based on all the calculations, and as I was mentioning, right, for me, I want to keep my investments and insurance separate. And when I realized that my LICs are like an investment for me, giving around 7-8% return. So for me, the next step was that I do get a term plan or personal term plan. And then yes, last year I got one. At 1/3 the value.
So you're saying that for your term plan, your premiums are 10,000. Let's compare it to your LIC, your premiums are 30,000. Your sum assured for your LIC is 10 lakh, but the sum assured that you get in your term plan is 1 crore, which is 10 times more than your LIC. So yeah, you're actually right that it's not good insurance also, it's not good investment advice also. All right, Tushar, thank you so much for joining us today. And folks, if you want to check out a term plan, head over to Ditto's website. There you can compare multiple term plans from multiple companies and get the one that suits you best. Thank you.
Thank you. Thank you for having me.